Hello, everyone. Welcome back to the Market Chat. My name is Richard Moglen. Joining me today is Jessica Ablamsky, growth stock investor. Jessica, thanks so much for being here. Welcome to the show.
Thanks for having me. It's a pleasure.
Awesome. So I always like to start things off by asking you a little bit about your background and kind of how you got interested in investing. So can you tell us a little bit about how you got interested in the markets and kind of where you got started?
Sure. Well, I heard about the stock market my entire life. My father is a very long-term investor. So I literally grew up learning the rules of the market. I didn't know that's what I was learning, but that's what I was learning. I mean, my entire life. Jess, something is only worth as much as somebody else is willing to pay for it. Jess, you've got nothing till you sell. And I heard these things, these very basic rules, and my dad was right, by the way. But I heard these very basic rules my entire life. But I also remember, I'm old enough to remember vividly the tech bubble bursting. Mm-hmm. I mean, I can't tell you how much anybody lost in the market, but I had the impression, the very strong impression that it was bad.
Right.
And then when I started my career, I started out as a newspaper reporter. When I started my career, it was right before the foreclosure crisis, right before everything started blowing up with Bear Stearns and Lehman Brothers. So I mean, the world economy nearly broke. Right. And again, my impression with the stock market was this is painful, and there are real world consequences for what happens in the stock market. I just was always terrified of the idea. But, a few years ago, I found myself with more money. It's a high quality problem. I found myself with more money in the bank than seemed necessary. So I thought, maybe I should put a little money in the market. It couldn't hurt. And my brother encouraged me. He really mentored me through the process.
That's awesome.
I would recommend this to anyone. If you're an experienced investor who wants to help out somebody, somebody who's just getting started, what he would do is he would present to me baskets of stocks. For example, these are 4 of the biggest tech stocks in China, or these are 4 of the most hated stocks on the market. But obviously they would be things that he would go long himself or already was long. Right. And he would tell me, these are the stocks, go do some research, pick one.
Right. That's awesome. And were you always kind of focused on growth stock companies, or have you kind of shifted from the value side to now what's working is more growth stocks? So that's kind of what you're focused on now.
I mean, I'll be honest, my family is always kind of, we talk about stocks a fair bit. And, my father, I don't think he would call himself a growth stock investor. He would just say, like, Jess, tech. I mean, mm-hmm. he's a tech, and he's a tech investor. He's been into Feng before it had a name. So tech was kind of a natural. I mean, anytime there's a pullback, Jess, the best stocks, they always come back. And, Apple, say what you want about the valuation of Apple. For the foreseeable future, when the market corrects or crashes, Apple will be back.
Right. It's definitely an institutional favorite. That's kind of what I call those type of stocks. And along the way, have there been any kind of books that you've kind of turned to kind of self-educate yourself, or it's really the mentorship of your brother and the rest of your family that has kind of given you the knowledge and ability to invest for yourself?
No, I've definitely read. I read a lot. I'm a writer, so reading is my go-to for learning. If people are interested in learning the very basics, the book I always recommend is Get Rich Carefully by Jim Cramer. Mm-hmm. He does, again, he gets a lot of criticism on Twitter. I think a lot of it is unfair because he does a fantastic job of educating retail investors. That's definitely a book. If somebody wants to learn the basics, it is a fantastic way to start. You know, I read books about value investing, but frankly, it didn't really seem like my thing. I did read 100 Baggers. It seems like everybody on Twitter read 100 Baggers.
Right.
That is a good one. It's very basic, but I got a lot out of it, and his research was fantastic. I did read a couple of books by I don't know if you've heard of Jim Collins. He is a business writer. He's one of the greats in business writing. And he wrote a book about how great companies fail, and that was really useful for me. It's not an investing book. It's not written for investors. It's written for people. You know, it's written for entrepreneurs and executives who want to avoid their great company failing. But I think it's really useful to know not just what to look for when to find a great company, but also what to look out for. What are the warning signs that this is not a great company? Or, for example, this is not a turnaround story. This is excessive risk taking, and it's destined to fail.
Right. That's definitely very important. And what would you say your kind of strengths and weaknesses are as an investor?
I think as the thing I'm working on most right now in terms of weaknesses is small and micro caps. I actually really enjoy finding them. And to be honest, I've found some, I don't do a lot of small and micro caps, but the ones I have been real winners. I got shaken out of a lot, and I got shaken out of them.
Yeah.
It doesn't matter how early you find a stock if you can't hold it on through volatility.
Exactly. Yep.
The small and micro caps, they're just brutal. The volatility, even intraday volatility, can be very high. So that's what I'm working on right now, is not just finding potentially great small and micro caps, but holding them until my thesis breaks.
Right. And what about your strengths? What do you think your strengths are as an investor?
I think my strengths. I really enjoy it. That's kind of a starting point.
No, that's important. That's very important. Absolutely. It inspires you to keep trying it and keep getting better. And like you said, you're working on your weaknesses. Staying passionate about it is so important, I think.
It is. I think for anything you do, passion is the best place to start. I'm never afraid to ask. It's, again, an occupational hazard. I'm never afraid to ask a question. I don't care how stupid it sounds. I want to learn and don't mind admitting, one, that I don't know something, and two, that I might be wrong. I think that is... I say it on Twitter a lot. It's making money is better than being right. Don't get me wrong. I am incredibly stubborn, and I consider that it can be a strength and a weakness, but I am incredibly stubborn. However, when my thesis breaks, I will get out and never look back. And I've taken relatively large losses on a couple of stocks because I realized my thesis was broken.
Right. And going along the lines of you saying you're never afraid to ask a question, that's kind of what I'm doing right here. I mean, I don't know how much you've seen kind of what I do, but I'm more on the kind of trading side of things, swing trading, position trading. And I am trying to focus on a lot of the same stocks you are. But I find that interviewing investors like yourself is very helpful because you get that kind of different perspective. And like you said, you have a longer term time frame. So you have to really be focused on companies that can continue to do well year after year and even decades if possible. So
preferably.
Yeah, preferably. That'd be awesome. Get those 100 baggers. But yeah, that's kind of what I'm doing right here, asking you questions, learning from you. So I think that's very important to never stop learning if you're interested in the market. No matter what time frame you're on, there's always something you can learn from somebody else, honestly. And
Absolutely.
yeah,
I think not just, not just in the stock market, but I think these are also skills that are very applicable to, I don't know what you're studying right now, but
right.
whatever your future, your future career. I mean, passion, curiosity, the desire to keep learning and getting better, the ability to control, particularly as a trader, the ability to control your emotions.
Right.
These are things that are incredibly important in the stock market, but they are key business skills.
Right. Right. And getting into your kind of investing strategy, I'd love to hear more about that. Starting with this, what are some kind of current themes that you're focused on in terms of, I don't know, industry groups, or you said you like tech, but is there any specific technology or group within that you're really looking at, whether it's EV, renewable energy, healthcare? We mentioned telehealth. What kind of groups are you focused on, basically?
Sure. Well, I think the overarching theme for my whole portfolio is digitization, which is
Right.
kind of a buzzy word, especially on FinTwit. But yeah, I was actually joking recently, and it's kind of true. The investing theme, the 3-word investing theme, is people are lazy, and
Yep.
and when you think about it, that's really the heart of digitization, that it's easier. And most people, humans, conservation of energy, most humans don't want to spend more energy doing anything that they have to. There's a reason that you order everything on Amazon rather than find the address of a store, get in the car, drive there, walk around, walk around the store looking for the thing that you want. And then maybe they don't even have it. I mean, it's absurd. Or telehealth, same thing. You make an appointment, you can't get one for 2 weeks. You have to take a half a day off work.
Right.
You go to the office and you're waiting for an hour before you even get into the appointment. Versus a telehealth appointment where you make the appointment, and if they're running late, no big deal, because you're sitting at home, or because you're sitting at home anyway, or wherever you happen to be.
Right.
So yeah, my overarching investing theme is that people are lazy. But in terms of groupings, I'm overweight e-commerce for sure. Amazon, JD.com,
Right.
China, which is not a FinTwit favorite, but I've been in that one for years. Took a lot of patience, but it paid off finally. What else am I in? Etsy, Pinterest isn't technically e-commerce yet, but I still personally suspect that I think that's kind of in its future. E-commerce is a big one for me. China in general is an important theme for me, but I've got a few stocks there, and I intend to stay long China. iBuying is a theme that I'm going to stay invested in until it is proven my thesis is broken again. My thesis for iBuying is that most investors think that residential real estate will never be disrupted because it has never been disrupted. If they are wrong, the potential upside is massive.
Right. So what type of companies are you looking at within that iBuying group there?
I am just basically buying every iBuying company that goes public. So I started with Zillow and got into Redfin, unfortunately late, and then Open.
Right.
And if anything else comes onto the market, I will buy that too. I've been toying with EXPI and Fathom, but I haven't taken positions. Sadly, in the case of EXPI, I was frankly at 45. I was waiting to see if it would go back to 41 or 42, and then it doubled instead. So that was unfortunate.
Maybe it gives a buying opportunity in the future, hopefully. Yeah.
There's always another opportunity.
There always is. And we were talking about this a little bit before we actually started recording, but how do you go about finding stocks? I mean, I think you mentioned there's a bunch of different ways, but what are your kind of top 3 ways to find new ideas?
Probably, to be honest, my top way to find new ideas is people I trust. The stock market is like anything else. You have to know who you trust at this point. I do know, I do know who I trust. And for people I trust very, very well, if they, every once in a while and get a call and say, look, this stock, you need to get in this stock now. And those are, those sorts of things I would take, I would take seriously. What they say about tips, everybody's got one, but again, knowing who to trust, I think knowing who to trust is incredibly important. And that's probably the top way that I have found really great companies is other investors that I know very well and trust deeply, and they already did the homework. So I had to kind of look into it and decide, yes or no.
Right.
Stealing other people's best ideas is a very good investing method. I do screening a little bit. I use stock screeners. That's the way I found Magnite pre-merger was Talari and Ruby, but Talari I was very bullish on. So yeah, every once AEYE, AudioEye, that really took off in mid-December. That actually is one that I found from a screen, for, just running stock screeners. Basically what I'm looking for is exponential growth. It doesn't have to be hyper growth for me, but I would like to see at least 20%. I mean, once you're getting, unless there's a good reason, once you're getting under 20%, I'm not as interested. But after that, once the basic fundamentals look good, once the basic fundamentals look good, I'm looking for something with a potentially interesting story.
Right. Makes sense. And you mentioned the figure 20%. Is that in terms of growing earnings, or is that more revenue?
Revenue. I don't need a company to be earnings positive yet. That's not. I would like it to be. I would like it to be earnings positive eventually. It's great when you find a company that, and this does happen occasionally, when you find a company with strong fundamentals, a great story, strong management, and it's about to be positive within the next year or so, but it hasn't skyrocketed yet, and that does happen once in a while.
Absolutely. And
Magnite Talari was actually a good example of that. It was right on the verge of it was kind of in and out of profitability per quarter before the March crash started.
Right. And in terms of looking for companies, how do you take valuation and market cap into account? Because you mentioned earlier that you're now really trying to look for those small caps and micro caps, and trying to get in a little bit earlier in on the story. So how do you kind of spread that out in choosing a company? Do you focus on a specific size? And will you invest in a stock even if it's deemed kind of overvalued by standard metrics?
I mean, I'll be honest, I don't even know what overvalued is anymore. Right. I'm very stubborn, but I won't, I'm not going to fight the market forever. I mean, I've been looking hard at Kahoot. I don't know if you're familiar with that one. Yeah, I've been looking hard at Kahoot, and the valuation will make your eyes water. But, honestly, I mean, sometimes you have to just hold your nose and buy. I mean, valuation doesn't matter until it does, but you gotta hope you've done your homework and it's a great company, because like my dad said, the best companies always come back. And tech, again, dad's always right. Sometimes when they turn around so fast your head will spin.
And how did you handle something like the March crash, where A lot of these high flying growth stocks lost 30, 40, even 50%. How do you handle that psychologically? And also, did you take any actions like hedging or raising cash?
Sure. Well, 2018,
Right.
if you remember, the end of, or late 2018, early
Mm-hmm.
2019, there was like a 25%
Mm-hmm.
correction. I think the market started going down, if I remember, in September, but it didn't eventually bottom until I think early January.
Yeah.
And after that, it was a V-shaped recovery. And I'll be honest, I remember on, I believe it was two Fridays in a row, the market was, the NASDAQ was down like 800 points, or maybe it was the S&P. Honestly, I don't remember. But anyway, I remember, down 800 points. And I really wanted to put some money in. But, my father very reasonably was like, Jess, there's no hurry. It had been at this point 10 years since the foreclosure crisis started. And frankly, we were due for a bear market. So I literally just ignored it. I put my phone away. I did not open to psychologically tolerate the drawdown, which is painful. Especially since half my portfolio was in China and we had a trade war. The whole thing was very painful. So I never opened my brokerage app. I only checked my portfolio on Seeking Alpha, and that was probably about once a week. Just the whole time the market was declining, I would just check once a week. And if you don't want to take action like buying a stock or hedging, I highly recommend just disengaging.
Mm-hmm. Makes sense. Based on my trading style, the way to go is to get to cash when it like breaks a key moving average or something like that. So it's interesting to see the different methods. And I want to ask you this: in terms of your overall portfolio, how many kind of stocks do you usually own, and how do you kind of allocate your capital, meaning choose different position sizes for different companies?
Sure. Oh, just to step back a minute, during March, by the way, I reacted totally differently, and I would not recommend it, and I will never do it again. But I did actually do the thing that you're never supposed to do, and I sold everything but JD. And my max drawdown was like 3 to 5%, I think. And then I almost immediately started reinvesting. I honestly did very well, even after it was mostly long-term gains. So even after taxes, it made financial sense. Again, I don't recommend that. I will never do that again. I got very lucky. I mean, epically lucky. But for what it's worth, that's what I did last time.
Gotcha.
I got very lucky.
It was such a powerful recovery, and such a quick fall too. I mean, it was two worlds, really, a V-shaped recovery to say the least. Going back to your position sizing, how do you kind of choose how many stocks to have in your portfolio and also manage those position sizes?
Sure. So my sweet spot, I've got two portfolios. I've got my taxable portfolio and my retirement account. And, there's only so much you can put, whatever kind of retirement account you have, there's only so much you can put into it every year. So that's kind of that I manage a little differently because it is a much smaller account than my taxable account. I'm used to being able to put in, as much money as I want. And then it makes it a little bit easier than when you're working with limited amounts of money in a retirement fund. It took me years to figure out how to how to make my retirement fund work. But for my taxable, which is my main portfolio, my sweet spot is about 15 stocks. Sometimes I have a little more, sometimes I have a little less. But honestly, when I have significantly more or less, I start getting anxious.
Right.
10 is just, I prefer to stay concentrated, but 10 to 12 is too much risk for me.
That's interesting because I would have actually expected you to have a little bit more than 10 to 15. So it's interesting because a lot of people say diversification is gonna save you during a March crash or February 2018. Well, not February, but late 2018.
Yeah.
But I guess you don't share that view.
I guess not. I 100% understand the logic. The more stuff, when you have 10 stocks, if you're wrong about 3 of them, which would make you a fantastic investor, 3 of your stocks could be, basically dead money. The more concentrated you are, the bigger the potential reward, but the bigger the potential risk.
Right.
I started out with like 4 or 5 stocks, so 15 is a major increase for me.
Right.
Maybe at some point, I'll have more stocks, but honestly, there's only so many companies I can develop enough conviction about to hold through everything.
And how do you develop that conviction? Is it doing research, reading stuff, listening to the earnings report calls? How do you build that conviction in your core holdings?
I guess I do. I do all of the above. I always listen to the earnings calls. I read whatever blogs and articles come out and talk to people about them on various social media platforms. But I think for me, part of conviction is just kind of spending time with the stock, I guess, and getting to know it. Every stock has a different character. And I do think, like Vive, I've chose, that was the first stock that I chose on my own without consulting my father or my brother, and I got very lucky. It was, it's just a fantastic company. But yeah, I mean, I think part of building conviction is just listening to the earnings reports quarter after quarter and getting to know this, getting to know the CEO and their style and how the stock moves.
Yeah, makes sense.
Getting familiar with not just the stock, but the company behind it.
Makes sense. And going off of that, what would be some red flags, maybe listening into the call, that would make you consider selling your shares, or maybe not even just within the call, but basically fundamental changes in the story? What would make you sell a company? And maybe if you have an example from the past that you've had to do that, kind of tell us about that experience.
Sure. It was a while ago that I sold Baidu actually at a loss. Since then, it did eventually recover. I think that was quite recently, but honestly, I took it off my radar. I believe I noticed that it's, finally back over 200. Don't quote me on that. Again, I took it off my radar, but the reason I took it off my radar was because I felt like there was no plan. Basically, it seemed like executives were just throwing stuff at the wall to see what sticks.
Right.
And I wasn't comfortable with that. I don't mind a rough quarter or even a rough year. Sometimes it's just not your year, but I expect a strong strategic plan to get back to growth. And I wasn't seeing that. Again, what I saw was just throwing stuff at the wall to see what sticks. So I sold, and I have no regrets about it.
Makes sense.
Grub is another company
Yeah.
that I sold at a loss. My thesis was that Grub was going to win food delivery, but as it turns out, food delivery was a very competitive space where capitalization, literally just having access to money, was more important than I had anticipated. So that's another one. I sold that one at a fairly sizable loss. Well, I must have been down not quite 50%, but close to it. I mean, I bought near the high and it crashed. So even the best investors are only right, 60-70% of the time.
And can you tell us a little bit about kind of your best performers of 2020? And also, if you had any duds in that portfolio, kind of talk about that as well.
Sure. I got very lucky into, like many of us, I got very lucky in 2020. That crash happened so quickly that the literal time difference between selling things and then repurchasing them was, within a week or two. Everyone remembers it was fast. My biggest winner was probably Livongo. Everybody knows, and everybody who didn't participate regrets not participating. But I heard about it on Twitter and I loved it immediately. I did some DD and I was just blown away. I'm not usually blown away by stocks like that, but it was the financial equivalent of love at first sight.
Right.
So I immediately, once it was trading stable at around 25 is when I didn't know how low it was going to go. And as far as I knew, when I started buying it, I was the sucker who was buying before the next leg down. But once it was stable at about 25, I went long. That was a big winner. Pinterest was another big winner. And everybody seems to have conveniently forgotten how much they hated Pinterest last March. There were not a lot of bulls on Pinterest. That was me being a little bit stubborn and contrarian. Every woman I knew was obsessed with Pinterest, and the market just hated it. I honestly really expected that Pinterest was going to be a slog, but it just took off out of nowhere. That was a big winner. That was a big winner for me. DraftKings. DraftKings might be last year was probably my biggest win after Livongo. I started buying DraftKings. Obviously, DraftKings is DEEK is what set off the SPAC. What set off this SPAC bubble, if that's what you want to call it. But I started buying DEEK at like 11, 12 bucks. So, and I was fairly aggressive with it. So I did very well in DEEK, and also SE, which is another FinTwit favorite. I was pretty impressed with it. I watched it move to about 60, and it was a little bit of a it was an act of faith. I legitimately thought this seems ridiculous now. I legitimately thought that move to 60, I had missed the run. Nobody could have predicted what was going to happen, or I would have sold my house to buy more SE. But SE was a big win. I also did very well in Square and Zillow. I wish I had bought Redfin at the time as well, but I didn't. But I did very well in Square and Redfin also.
Very cool. And this is good to ask an investor. How do you enter a stock? Do you enter all at once, or are you kind of dollar cost averaging into it until you build up a position that you feel comfortable with within your portfolio?
I don't know that I've ever entered anything all at once. How quick I prefer to buy slowly, but that's not the market we're in. So I have been, simply because the market has been moving so quickly, I've been building positions much quicker. Yeah, I mean, last March and March, April, May. I mean, I ramped up to full positions. For me, what would be lightning speed, because that's just the market we had. It's still kind of the market we have. You blink and the stock you blink and this small cap just doubled out of nowhere, or tripled, or it's 1,000 times. This market moves fast.
It sure does. And when you're entering a position, will you continue to buy when it moves down from your initial buy point? And is there a point where, if you do that you decide something might be a little bit wrong here, let me do some more research before putting more capital to work?
So I actually really like buying pullbacks. So a lot of people like to buy the all-time high, and I 100% understand the logic of it, but I still like pullbacks. So, for example, a good example of a trade for me, actually, normally if I'm trading, I'm going to be using options. But when I do that, I really only trade things that I would consider going long. I just don't have the emotional, I don't honestly have the emotional control to trade something that I wouldn't want to own forever.
Right.
So like with DDOG, I think it was last summer. You remember that there's this mini SaaS apocalypse? Yeah. So I created a bullish options position in DDOG, I think around 70, 75, something like that, and rode it to, I think about 105. And it was a wonderful gain. I mean, it was a wonderful gain. I basically, for that period of time, basically nailed the bottom and the top, and it was a really nice win. But DDOG, again, is a company that I chose not to turn it into a long-term relationship, but I would seriously have considered it. DDOG is a company I would go long. Open is another good example of a trade for me. I am long Open, but it's a crazy little stock. It's either up 5 or 10% or down 5 or 10%. For those that don't know, Open started as one of Chamath's SPACs. So after the ticker switched, it sold off, and it sold off hard. It was above 30 when the ticker switched, and it sold off down, from 32 or 35 down to 22. And 22 is the day, I think it was down 10% or more. And I was like, you know what? This is absurd. This is an overreaction. This cannot last forever. So at 22, I think the intraday bottom was a little under 22, but at 22, I created a bullish options position, and it was a good one, because the premium for the puts, I usually sell puts to buy calls. The premium I usually go fairly far out, preferably leaps, but sometimes leaps aren't always available. But I sold. I also always leave at least a little bit of room to be wrong, so I can take the loss and roll out. I was not wrong with Open, but I didn't know that at the time. So I think I sold May. I think it was May that I had sold, so that I have a little room to roll out if necessary. And the premium on the puts was at least equal to the premium on the calls. So the trade paid for itself. And, I nailed the bottom. They immediately were worth substantially more. And then it bottomed at 22 again. And at that point, I didn't buy any more options, although I kind of wish I had. But what I did do is buy more shares. And I did that again. It did the same thing again one more time. It was an intraday low. I said to myself, okay, tomorrow, if there's a big flush tomorrow, I'm going to buy more shares. And it was one of those, the moment it opens, it does a huge flush and then immediately reversed.
Right.
So I bought, so 3 days it went down to 22. The first I created a bullish options position, and the next two $22 events I bought more shares. And today, I don't know, Kathy Wood has been buying it. Today it's over 30. So
Right.
that's again a good. I actually closed the bullish options position yesterday, maybe a little bit early, but I don't know. I made I kept the shares. I sold the options position. I made I made a really nice profit very quickly, and it's a crazy stock. So when it does this again, I will probably do the same thing all over again.
Makes sense. And I meant to ask you this a while back when we were talking about your background, but what kind of tools do you use to either screen for stocks, keep track of your portfolio, or check quotes on basically the stocks that you're in?
Sure, I'm pretty basic. There are a lot of I'm familiar with a lot of tools, but the ones I use most are honestly just my brokerage. I do actually like to check things. I do have a Robinhood account that I almost never use, but I actually do like I do like the charts in it. I have more I have a far more advanced chart setup in my main brokerage, but Robinhood, I actually it does a good job of showing you real time how things are moving, and sometimes that's useful. So I do open that up sometimes if I'm really trying to squeeze out those last few pennies for a start or for an ad. But I also use Seeking Alpha. Usually if I'm doing, if I want to check things like the market cap and revenue and that sort of thing, I use Seeking Alpha. I use Finviz occasionally. Obviously I'm on Twitter all the time, which I do consider a tool actually.
Yeah.
And I'm on, all the all the stock and investing boards in Reddit, although I frankly don't think it's as useful as Twitter.
Yeah. No, I agree. And are there a couple people who you really like to follow on Twitter that you maybe like to shout out here or recommend, who do really good due diligence into the stocks that you kind of look for?
Oh God, it's so hard because there are so many. There are just so many amazing accounts. In terms of the traders, the traders I interact with most that I love are Satoshi Alien, Joe Trades. I think it's Joe Trader 4, but Joe, and also Resi Knows. Bennett Pattern Profits is amazing. In terms of due diligence, it's almost hard to know where to start. There are just so many good accounts for biotech and health tech in general. Richard Chu and Luosheng, Luosheng Peng. Those are two of my favorite we haven't talked much about health tech, but that's a major interest of mine. And those are two accounts I really like in that area. I mean, Richard is amazing.
Yeah. Awesome. And I kind of want to wrap things up with, if you want to talk about a couple of stocks that maybe that you're watching right now, still doing your research on, and are maybe interested in buying sometime this year if it presents a good buying opportunity.
Sure. In terms of something I haven't purchased yet, Kahoot is the big one that it very recently dipped to under 14, and I'm kind of kicking myself for not starting a position then. As I mentioned earlier, the valuation will make your eyes water, but that is a powerful trend. I've been looking for, I actually write about education. I've been writing about education for my entire career, and I've never found an education related stock that I was interested in until Kahoot. And also that gamification, that is a power trend in e-learning. That's something e-learning is also something I'm familiar with. That is a power trend in e-learning, and I don't expect it to end anytime soon. It just works too well. It just works. It works very well for children, for adults, and everything in between. So yeah, Kahoot is one that I'm keeping an eye on. I am building a position in GoodRx. It is very highly shorted. If you're gonna build a position in a company that is highly shorted, you need a very strong thesis. But I think GoodRx is worth the risk. I think it has a shot at being a monster. A lot has to go right to turn a company from 200 employees to 2,000.
Right.
But I think GoodRx has a shot. And I've been buying Enthusiast Gaming. It's a Canadian stock. It's listed in Canada and the US. It's an OTC, it's an OTC stock. But that is pretty that is one of my two small cap plays. It is not it's not low risk, but I think it's got a lot of potential. I try not to pound the table too hard on these highly speculative positions, but to be honest, Enthusiast Gaming is probably the company right now that I'm most excited about.
Awesome. And maybe for people who aren't super familiar with these companies, could you kind of give a brief description of what each of them does, Kahoot, GDRX, and also Enthusiast Gaming?
Sure. So Kahoot is education. It's a gaming stock, but it's education related. They have education. Users can create games and also share content. They have Kahoot for business, Kahoot for home, and also Kahoot for school. It is actually another international stock, but the growth has been massive. They've got a beta version of this social platform, which is really interesting because you've got investors like Disney. Owns a piece of the company. You've got investors like Disney who create content, Frozen and Marvel, to teach things like earth science. I know because I could not pass the child's earth science test. But you also have, kid-friendly brands, sponsored content from kid-friendly brands. I mean, ethically, I don't know how I feel about advertising to children while they learn, but as an investor, I mean, sign me up. GoodRx, you might have seen commercials. I first heard about GoodRx from my healthcare contacts, and I have heard on Twitter, and I can attest for myself as a healthcare marketing writer that healthcare professionals love GoodRx. It negotiates discounts for prescription drugs and they recently started telehealth, and it's been very sticky. People, a lot of their users are, these aren't one-off. A lot of their users, these are ongoing prescriptions. So it's pretty sticky. And like I said, I think GoodRx has a shot at being one of the monsters of healthcare. I think it's going to be a really interesting decade for healthcare. I think it's ripe for disruption the same way that residential real estate is.
Right.
Enthusiast Gaming is the largest gaming content creator that you've never heard of. I think the reason you've never heard of it is because the business, they don't just have one platform. The business is in different pieces. So they have a lot of websites and YouTube content for gaming, like Nintendo. And I mean, I'm sure your listeners know what games are. So it creates content for games. It also has an esports, has esports. It's got a league. So hopefully esports does what we expect, and this, this continues growing. It's got a new, the company has a new deal with Samsung for advertising, and I think that really shows the potential of the company. I hope one day we see a proprietary platform. I think the market would absolutely love that. I mean, it's got, I think, 2/3 the number of active users as Snap, and the market cap is just tiny. So this really could be an undiscovered gem.
Very
Definitely
cool.
worth, definitely a moonshot, sizing accordingly.
Absolutely. And obviously, for anybody watching, make sure you guys do your own homework, practice good risk management, and whatever stocks we're talking about, you have to follow your own process and decide if it's good for you. So, yeah, I want to ask you about healthcare. What do you think about Amazon kind of getting into the space and trying to, I guess, kind of be the big player in there?
I'm not scared of Amazon. Amazon is actually my second biggest position behind TDOC. I had full positions in TDOC and Livongo when they announced the merger, and oddly, there was not a lot of crossover in their user base, and I think oddly there wasn't a lot of crossover in their shareholder base either, at least if you can trust what I saw on Twitter. A lot of people were horrified, when the merger was announced, because Livongo shareholders are like, why are you saddling me with this, low growth company? And TDOC shareholders were like, why did you just pay way too much money for this absurdly valued company? But I immediately loved it, and now I have an outsized position. And Amazon is actually, sorry, SC overtook Amazon, but Amazon is still, Amazon and SC aren't separated by much. Amazon is a very large position for me, so I can say, as a shareholder of Amazon and TDOC, love Amazon. I see no reason not to hold it forever, but I'm not scared of Amazon. And Amazon is not the only company that's been making moves in healthcare. Microsoft has been making some really interesting moves in healthcare, not as a provider necessarily, but they have been doing some interesting things. Apple has been making moves in healthcare, again, not as a provider, but things involving data. I do not think this is the last move that big tech is going to make in healthcare, and I do not think it will necessarily prevent other companies from becoming monsters of healthcare. Only a fool is certain how the next decade is going to, how things are going to evolve over the next decade. Nonetheless, even with big tech making moves in healthcare, I think that there are companies out there that may do very, very well.
Very cool. And what are your overall thoughts about Teledoc? Because I actually just started a position a few weeks ago. So yeah, I'm interested in hearing kind of what you like about it, and also a little bit if you know about the cross-selling in between the Livongo and Teledoc customers. That'd be cool to hear your take on things.
Sure. Well, TDOC, you're going to have to pry on my cold dead hands. We'll see how I feel when it drops 50 or 85%. Every great stock has dropped that much at least one point. I believe Amazon dropped 85% multiple times. So we'll see how I feel when we get a real test of conviction. But in the meantime, I absolutely love TDOC. I mean, there's a reason I feel comfortable with TDOC as my number one position. Healthcare, kind of the same thesis as residential real estate. Healthcare has never been substantially disrupted. Many people think that means it never will be. And I disagree. I think the next decade is going to be very interesting. I think we might finally be, and I'm hoping because healthcare is broken, but I think we might finally be at the point where we can see some real change in healthcare and kind of use these tools that tech has been perfecting over the last 25 years to make real, to make real changes that benefit consumers. And I think TDOC definitely can be a part of that.
Awesome.
Could be.
Yeah, could be. Hope so. And it'd be great to see the healthcare system really pull itself together. Yeah, I always ask this one question at the end. Kind of what is your advice for somebody who's completely new to this? What book should they read? Who should they follow? How should they start learning about investing?
For people who are brand new, I would say a lot of the advice, like if you're on Reddit, for example, a lot of the advice you get is, oh, don't worry about investing now. Just go to college, work on your career. You want to make money before you start investing. I disagree. I really do. I personally think, because the magic of compounding really is freaking magic, that we're better off starting now. If you have absolutely no idea what to do, dollar cost average into SPY and triple Q as you learn about stock picking. And if all you ever do is dollar cost average into SPY and triple Q, unless America literally collapses, if you do that regularly, by the time you retire, you will have substantially more money than when you started. The discipline is important for anything. If you really want to learn about stock picking, like I said earlier, I always recommend Get Rich Carefully by Jim Cramer. I think it does a wonderful job of teaching new investors about the basics. And after that, I would learn as much as you can. I did read multiple books about value investing. It's not for me. Obviously, no, all credit to Buffett. He is amazing. It's just not my thing. But, I am obviously very aware of hyper growth. I do invest in hyper growth stocks, but that is not what I do exclusively. I think you need to learn. I think the best way to get started is to copy people you trust and then slowly evolve into your own style. I'm not a pure trend. I tell people I'm not a pure trend follower. I'm not a pure growth investor. I'm actually a little bit contrarian, but I'm not a contrarian investor. I invest in things that I like, that I think are going to do well. And I'm not opposed to a good trade. There are a lot of ways to make money. The things I do work for me. They're probably not going to work for you or some other guy. I think, I think in the beginning, buy companies that you're 100% certain are still going to be here in 10 years. And then slowly start learning so you can develop your own style.
I love that. Developing your own style is so important as you gain confidence. Awesome, Jessica. Thank you so much for giving us your time and sharing kind of your insight and process. I really appreciate it, and I'm sure everybody watching does as well. For everybody watching, I hope you guys did enjoy, and if you did, remember to leave a like down below and subscribe if you want to see more interviews with great investors and traders just like Jessica. And we'll see you guys in future videos.
Thanks for having me.